Joseph Ori, and I'm Executive Managing Director of Paramount Capital Corporation. We are a Northern California-based commercial real estate and financial advisory firm, and I'm pleased to announce my first recording for SimpLive training video titled Financial Statement Ratio Analysis. This is an excellent video. If you want to increase your intellectual capital in finance and accounting, you should definitely take this video. It's approximately 60 minutes long. It's broken down into 6 sections. And what I go through and show you is the 15 key ratios to analyze any company. And I use my example, I use a hypothetical company. I have the financial statements for that company, balance sheet, income statement. And this is USA Corporation. And I calculate these 15 ratios. They're broken down into 3 types: liquidity ratios, solvency ratios, and profitability ratios. And they look at everything from current ratio, do you have enough liquidity, current assets to pay your current liabilities, inventory turnover, accounts receivable turnover, debt to total capital, interest coverage. On the profitability side, gross margin, net margin, return on equity, return on assets. In corporate finance, there's about probably 40 different ratios you can use. I've whittled it down to the 15 key ones. And why do we have to do ratio analysis? Well, to understand any company, any operation of any business, that's the first thing you should do. You run these ratios, calculate the numbers, and compare them to the industry that the company is in, if there's industry ratios or the competitors of that company. In the video, I also calculate the same ratios for Ford Motor Company right off their 2014 and 2015 annual report. So again, if you want to increase your intellectual capital in accounting and finance, this is a great video. There's analysts on Wall Street that get paid millions of dollars a year to do what I've done in this video. So I hope you enjoy it. Again, financial statement ratio analysis. And this is on the SimpLive training website. Thank you very much.